Very good morning, my dear friends. I think so. We completed till now total 3 lectures with respect to the chapter Amalgamation. Maybe today's session will be the final lecture for the chapter Amalgamation. From the next session onwards, we'll try to start the chapter Internal Reconstruction. So in yesterday's session, almost, I think so, we discussed the problem number 5, but we had it to be resolved, right? So to continue my flow, let me read or let me give the summary of problem number 5. Then we'll continue to provide the answer. So the following draft balance sheets are given as on 31st March 2014. Two companies are there. One is Best Limited, another one is Better Limited. So the typical balance sheet is given under that fixed assets, investments, current assets under asset side. Coming to under liabilities, share capital, if nothing was given, means which are equity shares, reserves and surplus, and other liabilities are given. Following further information is given. Better Limited issued bonus shares on 1st April 2014 in the ratio of 1 share for every 2 held out of reserves and surplus. Yesterday I already discussed the entry. Entry was reserves and surplus account that are to equity share capital account. Now, how many number of bonus shares issued? 1 share for every 2 held. If you observe the number of shares in Better Limited were 10 lakhs divided by 100, which is equal to 10,000 shares. Am I right or wrong, guys? Now, for every 2 shares, if they are issuing bonus share in the ratio of 2:1 means number of bonus shares to be issued were 5,000. Now 5,000 into 100, which is equal to 5 lakhs. This is the first and foremost entry you should need to pass in the books of Better Limited. In the books of Better Limited, which is not an adjustment to be formed part of amalgamation. Next, coming to point number B, it was agreed that Best Limited will take over the business of Better Limited. So that's why we decided that Best Limited is a purchasing company and Better Limited is a selling company. Fine. On the basis of the latest balance sheet means after issue of bonus shares, the consideration taking the form of allotment of shares in Best Limited. As a result of takeover of business by Best Limited from Better Limited, the purchase consideration is to be discharged in the form of equity shares in purchasing company. That is the point he is conveying through point number B. Please all of you concentrate on point number C. The value of shares in Best Limited was considered to be 150 and the shares in Better Limited were valued at 100 after the issue of bonus shares. The allotment of shares is to be made on the basis of these values. So in yesterday's class, I already informed that even though they are not directly given that which is intrinsic value, we can simply consider that the purchase consideration computation is under intrinsic value method. Sir, in case of intrinsic value method, PC is equal to number of equity shares in selling company. May I know how many number of equity shares in the selling company after issue of bonus shares? Before issue of bonus shares were 10,000. Number of bonus shares issued were 5,000. Now 10,000 plus 5,000, total number of equity shares in Better Limited were 15,000. Now PC is equal to number of equity shares in selling company, that is in Better Limited, into intrinsic value per share in selling company. Intrinsic value per share in Better Limited, how much? 100 rupees. So the PC will be 15 lakhs. But if they ask the question that how many number of shares issued as PC, how many number of shares issued as PC, that is the total intrinsic value of selling company, 15 lakhs divided by intrinsic value per share in the purchasing company, which is 150, that equal to 10,000 shares. Do you understand? This is the amount of PC. This is number of shares issued as PC. Next, come to point number D. liabilities of Better Limited included 1 lakh due to Best Limited for purchases from it on which the Best Limited made a profit of 25% of the cost. First of all, this 1 lakh is an intercompany owings. For intercompany owings, the entry is trade payable account debtor to trade receivable account 1 lakh. That means after takeover of business by Best Limited from Better Limited, while presenting the balance sheet, we should need to club both the trade payables and reduce 1 lakh. We should also need to club both the trade receivables. We should need to reduce 1 lakh from trade receivables. That this is from current liability, this is from current asset. And in continuation to that, he also given the further information. Out of the goods purchased by Better Limited from Best Limited, the goods 50,000 out of the said purchases remained in stock on the date of the above balance sheet. You need to calculate the stock reserve and you should need to pass the entry goodwill account debtor to stock reserve account. How much amount? Which is equal to 125. For 125, which is equal to 50,000, then for 25, how much it is? Sir, how you know which is 125, sir? It is clearly given that made profit of 25% on the cost. If you can assume 100 rupees is the cost, add 25 rupees, 125 will be the selling price. Now this 50,000 is at selling price. So for 125, if it is 50,000, then for 25, which is how much, guys? 10,000. Fine. Make the closing ledger in the books of Better Limited. We should need to provide the accounting treatment in the books of selling company and the opening journal entries in the books of Best Limited. That is accounting treatment in the books of purchasing company. Finally, we should need to prepare the balance sheet after takeover. So let us complete one by one in my OneNote. Please all of you concentrate here, guys. So the problem number is 5, right? So first, we should need to start the problem with accounting treatment in the books of Best Limited. In the books of Best Limited. Can you please tell me, guys, all of you, in the books of selling company, accounting treatment will be 5-step approach. That is AS 14 doesn't applicable, GAAP will be applicable. Step number 1, dismantling of balance sheet. All the assets and liabilities which are taken over by the purchasing company should be closed and transferred to realization account at book values. So I'm going to open realization account here. Apart from the realization account, any asset or liability which is not taken over should also needs to open, but all the assets and all the liabilities are taken over. Then you can open equity shareholders account. Equity shareholders account. You can also open purchasing company, which is Best Limited account. Am I right, guys? Can also open as a purchase consideration. We are getting equity shares of Best Limited. You can also open this account. So for the time being, these 4 accounts you can open, guys. At later point of time, if anything is required in further, we can check. Please, all of you open in your book. Please complete this problem along with me. My ledgers are almost ready. Fine. So let me start with dismantling of balance sheet. Assets means fixed assets, investments, current assets here. You may transfer to realization. 2 fixed assets. You can only see balance sheet of Better Limited, which is 15 lakhs. Then investments, nothing is there. Current assets, 5 lakhs. 2 current assets, 5 lakhs. Coming to liabilities, only other liabilities exist, which is 2 lakhs. Next, share capital. Please all of you remember that share capital is not 10 lakhs. After issue of bonus shares, 5 lakhs were increased and there is a reduction of 5 lakhs in reserves and surplus. So that's why the share capital you need to transfer to equity shareholders account was 15 lakhs. It was not 10 lakhs. That point you should need to remember through point number A. So coming to equity shareholders account, by equity share capital, which is at 15 lakhs. Next, by reserves and surplus. By reserves and surplus was only 3 lakhs. Fine. This is all about dismantling of balance sheet. Next, sir, after dismantling of balance sheet, step number 2, purchase consideration due. In the working note, you should need to calculate PC. Working note number 1, calculation of PC. In bracket, you can mention under intrinsic value method. So what is the formula for PC in case of intrinsic value method? Number of equity shares in selling company multiplied with intrinsic value per share in selling company. Number of equity shares in selling company were 15,000 and intrinsic value per share was 100. So the total amount is 15 lakhs. Now, out of this 15 lakhs, how many number of shares issued? Just I'm writing number of shares issued as PC. 15 lakhs divided by intrinsic value per share in purchasing company, which is at 150, that equal to 10,000 shares. That means in the books of purchasing company, I'm talking about in the books of purchasing company, at the time of making settlement to the liquidator, how we should need to record, 10,000 into 100, which is 10 lakhs as equity share capital. 10,000 into 50. This is not in the books of selling company. In the books of purchasing company, at the time of making settlement to liquidator and the third entry, 5 lakhs you should represent under securities premium. Okay, so just for understanding that bifurcation also given here. Okay, fine here. Come to step number 2, PC due. The entry is purchasing company account at R2 realization account, that is under realization by Best Limited. If you want, you can put under working note number 1, amount is 15 lakhs. In realization by Best Limited, in Best Limited to realization. Next, PC receipt. So PC you are receiving in the form of equity shares. Entry, equity shares of Best Limited account at R2, Best Limited. In Best Limited, by equity shares of Best Limited, worth of 15 lakhs you are getting. Now I'm also opened equity shares of Best Limited account. Under equity shares of Best Limited account to Best Limited account, which is 15 lakhs. Next, so now you are having PC with you. I mean, in the hands of liquidator, he is having worth of 15 lakhs equity shares related to the Best Limited. Now such PC they need to distribute in a particular order. First, liquidation expenses or realization expenses. There is no information given with respect to the realization expenses or liquidation expenses. Then current liability, then secured creditors. After that, unsecured creditors. Then finally, preference shareholders. Then finally, equity shareholders. Here, there is no secured and unsecured creditors as well as preference shares. That's why you can make a final settlement to the equity shareholders. But before making final settlement to the equity shareholders, close the realization account, find the profit or loss, guys. I think so. This is loss this side by equity shareholders account. How much is the loss? 3 lakhs will be the loss, right? Under realization by equity shareholders, then in equity shareholders to realization. How much? 3 lakhs. Now you can check it, guys. Under the equity shareholders account, balance will be how much? 15 lakhs. To pay the balance of 15 lakhs, you are having the equity shares of Best Limited. Just to make it payment to the equity shareholders by equity shareholders account, 15 lakhs here. Here, equity shareholders, 2 equity shares of Best Limited, 15 lakhs. With that, all the accounts got closed. If you observe here, realization account anyway closed. Just now we closed the equity shareholders account. Equity shares of Best Limited also closed. Best Limited already closed. Are you with me, guys? All of you? Such a simple accounting treatment we need to follow in the books of Best Limited. Okay. Okay, here I put the Best Limited. Sorry. In the books of Better Limited. Okay, sorry. Just I wrote wrongly, but entire discussion I made it correctly only. Okay, fine. This is in the books of Better Limited, which is selling company. Now, let us provide accounting treatment or journal entries in the books of journal entries in the books of Best Limited, which is purchasing company. Am I right? Please, all of you participate, guys. Here, your participation should be required. What will be the first and foremost entry? Or before deciding that, what will be the type of amalgamation? Type of amalgamation. Is it amalgamation in the nature of merger or is it amalgamation in the nature of purchase? Sir, nothing was given. How we can know, sir? How we can know? Am I right? In generally, most of the cases, they will give the type of amalgamation. If nothing is given, first you should need to check the conditions. Sir, is it all assets and liabilities taken over? Yes, sir. All assets and liabilities taken over at book value, sir. Yes, sir. Next, sir, PC should be in the form of fully paid up equity shares, sir. Yes, sir. Sir, shareholders holding 90% of the share capital should become the shareholders of the purchasing company now. Yes, sir. That was also possible, sir. The same line of business is also taken over. Then, which may look like amalgamation in the nature of merger, right? But still, unless otherwise specifically mentioned that this is amalgamation in the nature of merger, we are not considered it as in the nature of merger. One more time, I'm repeating, unless otherwise, if it is specifically mentioned that the amalgamation is in the nature of merger, amalgamation in the nature of merger, then only you should need to consider it is in the nature of merger. Otherwise, simply you can assume that the amalgamation is amalgamation in the nature of purchase only for the purpose of academics. By looking the problem, it may look like that which is in the nature of merger, but still we can't consider it is in the nature of merger. What is the reason, sir? Why, sir? We don't know those conditions specifically, because is it same line of business continued with other company? We don't know. So somewhere some information is missing. So that's why unless otherwise specifically mentioned, we should always thought that the amalgamation is amalgamation in the nature of purchase only. But don't worry, guys, that type of ambiguity will not exist in the examination point of view. Most of the times, almost more than 99% cases, they are clearly provided the type of amalgamation. They don't want to test on such issues in the examination. Okay, so that's why type of amalgamation is amalgamation in the nature of purchase. Amalgamation in the nature of purchase. Method of accounting. What will be the method of accounting, sir? Can you please tell me, guys, all of you, if the amalgamation is amalgamation in the nature of purchase, method of accounting is purchase method. Then you can start providing the journal entries. First and foremost entry is business purchase account at R2. All of you, please participate. Business purchase account at R2, liquidator of Better Limited account. Correct. At the rate of PC. PC was how much? 15 lakhs. What will be the second entry, guys? Incorporation of assets and liabilities. What are all the different assets taken over by the purchasing company? Fixed assets. Fixed assets account at R. At which value? 15 lakhs. Next, current assets account at R. At which value? 5 lakhs. To other liabilities account. At which value? 2 lakhs. These are the different assets and liabilities taken over by the purchasing company. To business purchase, you should need to cancel the business purchase, which is at 15 lakhs. Now you can compare PC with NAV, guys. You can compare PC with NAV. PC was 15 lakhs, which is PC. NAV is nothing but assets minus outside liability. That is 15 plus 5, 20, 20 minus 2, 18 lakhs. Can you please tell me, all of you, is it the situation PC greater than NAV or PC less than NAV? PC less than NAV. If the PC is less than NAV, which is capital reserve, this situation will arise into capital reserve or goodwill. Tell me, guys. Capital reserve. How much? 3 lakhs. We are paying the less amount, but we are getting the more benefit. So capital reserve, you can incorporate under credit aspects. So to capital reserve, which is 3 lakhs. So now the total of the debit aspects and total of the credit aspect will match. 15 plus 5, 20. This side also 15 plus 5, 15 plus 3, 18 plus 2, 20. Next, coming to the third entry, you should need to make the final settlement to liquidator of Better Limited. That is liquidator of Better Limited account debtor 15 lakhs. Now we already clearly provided the bifurcation. We are totally issuing 10,000 equity shares, 100 rupees face value, 50 rupees securities premium. That's why 2 equity share capital 10 lakhs to securities premium 5 lakhs. So 2 equity share capital, that is the reason why I provided at the time of computation of PC itself 10 lakhs, 2 securities premium 5 lakhs. Is it fine, guys, all of you? Here, apart from these, certain special entries also we need to provide. One is for intercompany owings, another one is for stock reserve. So the next entry is for intercompany owings. That is 1 lakh will be due. The due was under other liabilities and it is there. One second. In the books of Best Limited, it will be there under current assets. That's why you need to knock off with each other. Other liabilities accounted are to current assets is the entry. Other liabilities accounted are to current assets, because here current liabilities was not specifically given. Current liabilities were not specifically given. That's why I considered other liabilities here. And current assets here specifically given. That's why I considered current assets. So amount was 1 lakh. Next, fifth entry. The entry is goodwill account debtor to goodwill account debtor to stock reserve. The amount will be 10,000. But I already told you in entry number 2, if you are end up with capital reserve, no need to give debit to the goodwill. You can directly debit the capital reserve. The reason, if you want to give debit to the goodwill, again such goodwill should be knock off with capital reserve. That's why on behalf of writing the goodwill, I can directly put capital reserve 10,000 to stock reserve account. Hope all the adjustment I wrote. Am I right, guys? All of you? Fine. So these are the journal entries we need to pass in the books of Best Limited. That is in the books of purchasing company. And prepare the balance sheet as at 1st April 2014 after the takeover. Now I should need to start preparation of balance sheet under Schedule 3 format. Concentrate. Balance sheet of Best Limited as on 1/4/2014. 1/4/2014. In bracket after takeover Now, can you please tell me, guys, all of you? We are starting with serial number, particulars, note number, amount rupees. Practically, we need to represent both current year information as well as previous year information if both the information is available in the problem. But in the problem, only current year information is available. That's why no need to mention the previous year information. Am I right, guys? Now, for notes to accounts, also you can provide the space here, which are, start here. Notes to accounts, you can start below. Simultaneously, we will do it, guys. First, may I know the first and foremost component under liability side, equity and liabilities. Under equity and liabilities, number one, shareholders funds. Guys, hope you know all such things. I am unable to explain again schedule 3. Shareholders fund. Under that, A equity, there is, sorry, A share capital. A share capital. Note number 1. Come down, guys. Notes to accounts. Number 1. How notes to accounts also in general you need to represent serial number, particulars, amount inner column and amount outer column if required actually. Okay. Here only I put only one amount column. Number 1, share capital. So here only one type of shares are there. Those are equity shares. Please all of you come to Best Limited. Sir, Best Limited already had to the extent of 20 lakhs worth of equity shares. Now in the form of PC, they issued 10,000 equity shares. If you observe under entry number 3, they issued another 10 lakhs face value of the equity shares along with the premium of 5 lakhs. That's why here 20 lakhs plus 10 lakhs face value, total 30 lakhs worth of equity shares will be there. The same way you can represent here. Total 30,000 equity shares at the rate of 100 each. How much, guys? 30 lakhs. The same thing you can put here. Actually, we need to represent like this. That is authorized share capital, issued, subscribed, called up and paid up. But here there is no such information is available. Directly I put it in very simple mode. But if authorized share capital information is there, you need to put the authorized share capital, then issued, subscribed and called up less call scenarios, then paid up capital will coming into the picture. Next, number 2, reserves and surplus. Reserves and surplus, guys. So you can put this one as well, B, reserves and surplus. Now all of you concentrate. The existing reserves and surplus in Best Limited were 10 lakhs. Am I right or wrong? Now, during the process of amalgamation, we are getting any reserves and surplus, all of you. In the first entry, there is no reserves and surplus. In second entry, we are getting capital reserve of 3 lakhs. Third entry, we are having 5 lakhs worth of securities premium. Fourth entry, no impact. Fifth entry, the existing capital reserve got reduced by 10,000. That's why the net capital reserve will be 3 lakhs minus 10,000, which will be 2,90,000. So come here under reserves and surplus. First start with capital reserve. Capital reserve. Inner you can represent 3 lakhs minus 10,000, which will be 2,90,000. Which will be 2,90,000. And next securities premium will be there for how much? 5 lakhs. Sir, drafting the balance sheet is an art, guys. Don't by heart anything. Sir, how you can simply recollect and all such things and you are able to present it, sir? So once you will get good command on the entire balance sheet, then you can easily recollect what are all the different components it have. And from chapter to chapter, the preparation of balance sheet will also change. I mean, the art of preparation of balance sheet will also change. I mean, what I want to try to explain here, you may not put the same type of logics to prepare the balance sheet for each and every chapter, because if it is a consolidated financial statements, then how to recollect the components of financial statements is different picture. If it is the internal reconstruction chapter, then how to recollect the components is altogether different. If it is the amalgamation chapter, it will be the different. So then how it will be habituated or how it will come to us, sir? It's very simple. First of all, you should need to understand what really happened in that particular chapter. Then to which components really the impact will be there at the time of preparation of financials, to which components it will hit, you need to check. Then automatically you may get the flow. Are you with me, guys? Are you able to understand what I am telling here? Because everyone simply know the preparation of financial statements, but nobody will follow that flow. Which logic I should need to remember, which logic I should need to apply, you should know at the time of preparation of balance sheet in the examinations. That is much more important. Fine, guys. Now reserves and surplus total will be 7,90,000. Let me put this here. Sir, till now what I made is correct, right? Stock reserve is not a reserves and surplus, ma. Stock reserve we are going to reduce from stock under the inventory. Do you understand? Stock reserve don't write under reserves and surplus. Stock reserve is not a reserves and surplus. Fine. The next component will be under the liabilities. Only one thing is there, which is other liabilities. It is given. You can put under directly under current liabilities. Other liabilities you can consider it as a current liabilities. Sir, current liabilities, how much I can write, sir? Please concentrate here. From here onwards, line by line addition. I don't want to make it present under notes to accounts. Actually, in the examination, you need to make it present. 20 lakhs existing plus 2 lakhs. 20 lakhs existing plus 2 lakhs. Minus intercompany owings. If you are observing, 1 lakh will be there. Intercompany owings. That's why you need to reduce minus 1 lakh. So the total will be 21 lakhs. If you want to represent it under notes to accounts, how you should need to represent, you know, which is current liabilities or other liabilities. First, you should need to start with best limited. So best limited other liabilities, how much? 20 lakhs. Add better limited liabilities. Add better limited current liabilities. Better limited current liabilities, how much? 2 lakhs. We are taking over at book value only, na? Please, all of you observe entry number 2. Current liabilities. That is other liabilities we are taking over at book value, na? 2 lakhs only, na? So the same value just I am recorded. Okay. Then total will be 22 lakhs. Or you can put here itself. The total will be 22 lakhs less intercompany owings. So this is the first problem. That's why I'm telling in detailed amount. 1 lakh. So net will be 21 lakhs only. So the same thing I already presented here. Next, sir, I think so with this liabilities portion is over. Now you can able to start the assets. Come here under assets. You can start with. Tell me, guys. You can start with the non-current assets. Under assets, non-current assets. Under non-current assets, A, PPE, property, plant and equipment. So the PPE 25 plus 15, I think so. There is no other adjustments are there. So 25 lakhs plus 15 lakhs, total will be 40 lakhs, right? Next, investments. You can put under non-current investment, not an issue. Non-current investments. Total will be 5 lakhs. There is no investment under Better Limited. Coming to current assets, guys. To current assets. Again, actually, we need to represent under notes to accounts, but just I am representing under bracket. Current assets 20 lakhs in Best Limited. In Better Limited, which is 5 lakhs. Minus intercompany owings 1 lakh. Minus stock reserve, we need to reduce. If you observe, stock reserve will be there now. So stock reserve we need to reduce from the stock now. Stock will be there under current assets now. So that's why minus 10,000. Minus 10,000. May I know, guys, all of you, current assets value is how much? 24 minus 10,000 means 23 lakh. 90,000. Then can you please tell me the totals of balance sheet? Is it got tallied? What are the totals of balance sheet? Is it 58 lakh 90,000, guys? Totals, nobody is telling. Sir, we are not considering the reserves and surplus of Best Limited existing. I think so, which is 17 lakh 19,000. Check. We've only considered the reserves and surplus taken over. The existing reserves are there now. I think so. I ignored this. Existing reserves and surplus. Please check it. Existing reserves and surplus first to 10 lakhs is there now. So just you can add 17 lakh 90,000. Am I right, guys? And now you can cross check quickly. Is it tallied? Anything need to adjust? 68.9 total of the assets. 68.9 total of the liabilities as well. Okay, if you made any small clerical mistakes, then you need to identify here itself at least. Okay, so reserves and surplus, existing reserves and surplus of Best Limited I didn't consider previously, but now I considered because balance sheet was not got tallied for me. That's why I can easily identify that clerical mistake. Is it okay, guys? All of you, balance sheet got tallied, right? Fine. Hiral, how we take other liabilities and current assets? Please explain. My dear, there is no rocket science here, yaar. You can consider this other liabilities as current liabilities. Then everything will coming into the picture. What is the journal entry for intercompany owings? Intercompany owings, the journal entry is trade payable to trade receivable. Trade payable to trade receivable. Trade payable will be there under current liabilities. Trade receivable will be there under current assets. So that's why I passed the entry simply other liabilities accounted up to current assets. The entry will be trade payable to trade receivables only, but there is no specific information is given now. That's why we can assume that trade receivable will be there under current assets and trade payable will be there under other liabilities. That's it. Do you understand? Fine, guys. The problem is pretty much simple. Hope you understand everything. Can I move into the another problem? Please, all of you, if you have any doubt, please let me know, or otherwise I'll move into another problem. Please, all of you, put your thumbnails or thumbs up symbols quickly. Quickly, guys, all of you. Please show your thumbs up symbols. Then I can proceed with the other problem. If you observe here, in the classroom itself, this problem I resolved within 30 minutes by explaining the things. Okay. Nobody is providing any thumbs up symbols. Now I got. Maybe there is a delay. Yes, sir, proceed. I'm showing the screen now. And one more thing, guys. No worries. Don't take the screenshots and all other stuff. The reason is that is for your unnecessary headache, because here my notes will be there now. In my notes, Everything will be there clearly. For example, this is problem number 5, right? So PCI calculated, closing ledgers, I worked out, journal entries, I worked out. Do you understand? Everything will be there clearly. So then you can directly explain from this notes itself. Nah? I can explain, but that is not the correct methodology. Then your brain may not think in the correct mode. Okay. So that is the reason why, at least for some problems, I'm trying to resolve in the classroom itself. Then your thinking abilities will be much more acting in the good manner in the examination. Fine. I'll take up one problem in amalgamation in the nature of merger. Almost we done 2 to 3 problems in amalgamation in the nature of purchase. So this is the time for amalgamation in the nature of merger. Please all of you come to problem number 9, guys. I know in between some problems are there, but please you can jump to problem number 9. All of you. Sir, all assumption is to be written. Yes, always assumptions are form part of answer. Whenever there is a chance to take an assumption, then you should need to clearly represent that. Thakur Smita Singh asked a question. Sir, I have a doubt in how to identify the use of intrinsic value method. It is not mentioned in the question. That is the point I told you, ma. They are not always mentioning that it is an intrinsic value method. For example, if the purchasing company and selling company agreement will be look like this. For example, in the books of selling company, the share price is 50 rupees. In the books of purchasing company, the share price is let us assume 70 rupees. Now, purchasing company discharging PC to the selling company on the basis of these values. On the basis of these values means such values are intrinsic values only. Sir, what is the meaning of intrinsic value? Intrinsic value is nothing but the real value of each and every equity share. Do you understand? Or the net asset value per share. Sir, they are discharging PC on the basis of these values means they are discharging the PC on the basis of intrinsic value. No need to mention specifically. Okay. Next. Okay. So many persons are telling that why these notes is my notes is not at all appearing, guys. So many persons are telling. I mean, the notes which was uploaded by me. This notes not at all visible, guys. Which notes? Just a second. This notes. Can you please tell me, anyone at least? Do you able to find my notes in the downloads? Sir, it is available. Yes, so many persons, they are unable to download it. So please, you can go back, and I clearly intimated with the same name also, I think so. Amalgamation for print or something. Yeah, amalgamation print. The title is amalg.print. Okay, like that it will be there. You can find it, guys. Fine. The next problem is problem number 9, right? Let me open that. Yeah. Consider it, guys. Consider the following summarized balance sheets of X Limited and Y Limited. There are two companies exist. One is X Limited and another one is Y Limited. Land and building is given. Plant and machinery. Furniture and fittings. Investment. Inventory. Trade receivables. Cash and bank. Okay. This is all about assets. Coming to liability side. Equity share capital face value is 10 rupees each. 14% preference share capital face value is 100 rupees each. General reserve, export profit reserve, investment allowance reserve. Maybe, I think so, these two are statutory reserves. Profit and loss account, 13% debentures, trade payables, other current liabilities. These are the liabilities information. If you're observing how I am reading the balance sheet, you know, I'm not at all touching any figures. But what are all the different components it have? I will look into it. Okay, in the same way, in the examination, whenever the balance sheet is coming into the picture, you should also only read the components Don't give concentrations on figures, but you can give concentration on the face values and all other issues. Okay, fine, come down. X limited takes over the Y limited. X limited takes over the Y limited means Y limited is a selling company. X limited is a purchasing company. Okay, next. On 1st April 2011, X limited discharges the purchase consideration as below. Issued 3,50,000 equity shares of rupees 10 each at par to the equity shareholders of the Y limited. Any amount payable to the equity shareholders of the selling company is form part of PC. Yes, it is form part of PC. Issued 15% preference shares of 100 each to discharge the preference shareholders of Y limited at a 10% premium. Any amount payable to preference shareholders of the selling company is also form part of PC. Yes, point number 2 is also form part of PC. Fine. Let me read the further information. The debentures of Y limited, that is the debentures of selling company, will be converted into equivalent number of debentures of X limited. After takeover, you should need to knock off the debentures of the selling company and your own company debentures you need to issue. The statutory reserve of Y limited ought to be maintained for 2 more years. If you observe, it was clearly given that the statutory reserves of the selling company should be maintained in the purchasing company. At that point of time, only amalgamation adjustment account coming into the picture. That too, the type of amalgamation should be amalgamation in the nature of purchase. In case of amalgamation in the nature of merger, no need to pass amalgamation adjustment account entries. The reason was the reserves and surplus of the selling company will be automatically become the reserves and surplus of the purchasing company. Show the balance sheet of X limited after amalgamation on assumption that the amalgamation is in the nature of merger, the amalgamation is in the nature of purchase. A single problem covers both the methods. That is the reason why this problem is taking for the discussion in the classroom. First, we will try to complete the problem on the basis of amalgamation in the nature of merger. Then we will start discussing amalgamation in the nature of purchase. If the other method is possible, then what will be the adjustments? We will look into it. Is it okay, guys? All of you with me? Sir, before doing all such things, can you please tell me, all of you, first, for any problem, we need to calculate PC, na? Method of PC, PC method may I know? All of you, please send your arrows to query box. Please send your answers to query box quickly. Can you please tell me, guys? PC, method of PC. Nobody is telling. Method of PC. Net payments. That's great. Yes, the method of PC is net payments method. So first, let us calculate the purchase consideration amount under my OneNote. Roll number 9. They're actually asked to prepare the balance sheet directly. But before preparation of balance sheet, in the working note, you can calculate PC. Calculation of PC under net payments method. Now, how to calculate PC under net payments method, guys? Particulars, amount rupees. Now, first, amount payable to equity shareholders. It is clearly given that 3,50,000 equity shares of 10 each at par to the equity shareholders of Y limited. You can put the same information, 3,50,000 equity shares at the rate of 10 each. That will be 35 lakhs. Next to preference shareholders. Issued 15% preference shares of 100 each to discharge the preference shareholders of Y limited at a 10% premium. Now, can you please tell me, guys, all of you, the existing preference shareholders, in the books of selling company was 17 lakhs. These are discharging at 10% premium means we should need to pay 18 lakhs 70,000. Now, the same information you can put here. 15% is preference shares issued at the rate of 100 each. At the rate of 100 each to discharge 14% preference shareholders at the rate of 10% premium. Do you understand? We are discharging 14% preference shareholders at the rate of 10% premium through issue of 15% preference shares at the rate of 100 each. So that's why in bracket, which is 17 lakhs multiplied with 110%, which is 18 lakhs 70,000. May I know the total amount is how much? The total amount is 53 lakhs 70,000 will be the PC. Do we agree, guys? All of you? PC will be 53 lakhs 70,000. Now, in the first case, what is the case? Case number 1. We assumed that amalgamation is amalgamation in the nature of merger. Sir, before proceeding with balance sheet, in case of amalgamation in the nature of merger, what is the special issue, guys? The entire reserves and surplus of the selling company would become the reserves and surplus of the purchasing company. That is one thing you need to remember. And another thing was, at the time of comparison of PC with NAV, we should need to compare PC with share capital of the selling company. If PC is more than the share capital of the selling company, the loss we need to set off with the free reserves of the purchasing company after takeover of reserves and surplus of selling company. No, sir. If PC is less than the share capital of the selling company, then which is outrightly a profit situation, the profit you can make it transferred to capital reserve. That point all of you remember, guys. That is the special issues amalgamation in the nature of merger. Now, just a second. Now, if you observe all of you, while comparing the PC with NAV, the PC is 53 lakh 70,000 and the NAV here, NAV is nothing but share capital of the selling company. Share capital of selling company. May I know the share capital of selling company here? That is share capital of Y Limited. How much? Share capital of Y Limited will be 30 lakhs, right? Share capital of the selling company is 30 lakhs. Why you are considering the share capital of the selling company? Because all the assets are taken over. All the liabilities also taken over. Along with the liabilities, the reserves and surplus are also belongs to whom? Purchasing company X Limited. That's why here NAV is nothing but only share capital. Sorry, not 30. Share capital means total, na? 30 plus 17, 47 lakhs. Which is 47 lakhs. Yeah. Now you can compare PC with share capital of the selling company. Here PC is greater than share capital of selling company. That's why, which is the loss situation. May I know how much will be the loss? Loss will be 6,70,000. Such a loss you can set off with free reserves of the purchasing company after takeover of reserves and surplus of selling company. Now concentrate. Free reserves means other than statutory reserves are simply general reserve or profit and loss account. If you observe here, general reserve of the selling company was 5 lakhs. Sorry, general reserve of for purchasing company was 5 lakhs and for selling company was 2,50,000. 5 plus 2, 7,50,000. Coming to profit and loss account, this is 7,50,000 and this is 5 lakhs. Total, this will be 12,50,000. We required only 6,70,000 only. according to your opinion, you can use either general reserve or profit and loss account as per your wish. There is no specific provision providing the guidance here. According to your opinion or according to your discretionary criteria, you can use either general reserve or you can use either profit and loss account. Okay, fine. So in the order, first it is coming general reserve. Just I'm using the general reserve. Please concentrate. Loss 6,70,000 is there. First, general reserve. I'm taking 5 lakhs plus 2,50,000. 5 lakhs plus 2,50,000. The total will be 7,50,000. Now the loss of 6,70,000 I am knocking off, and the remaining general reserve will be shown in the reserves and surplus of the purchasing company. How much? That is 80,000. 80,000 will be shown in balance sheet. Sir, what about P&L, sir? Simple line by line addition. 7,50,000 plus 5 lakhs, 12,50,000. We can put under the balance sheet. One more time I am repeating. Please all of you concentrate. In case of amalgamation in the nature of merger, we need to compare the PC with share capital of the selling company. If PC is greater than the share capital of the selling company, the loss we should need to make it set off with free reserves of the purchasing company after takeover of reserves and surplus of the selling company. Now, if you observe, the free reserves of the purchasing company after takeover of reserves and surplus of the selling company are 5 lakhs plus 2,50,000, 7,50,000 in case of general reserve. In case of P&L was again, in case of P&L was which is 12,50,000. I required only 6,70,000. That's why I knock off such loss with only general reserve. No need to utilize the profit and loss account balance. The entire amount of 12,50,000 will be automatically coming under balance sheet. Okay, fine. Now let us start presenting the balance sheet. Except this, there is no other special issue is available here. Let us start the balance sheet. Serial number, particulars, note number, amount rupees. Sir, if the problem they asked in case of amalgamation in the nature of merger, your headache is almost released. You know why? In case of amalgamation in the nature of merger, only simple line by line addition. Simple line by line addition. Nothing is great here. Let us start with equity and liabilities. Equity and liabilities. Under that, shareholders funds. Shareholders fund. A, share capital. So now we are in the books of purchasing company. The existing share capital 50 lakhs is there for equity share capital. Preference share capital will be there for 22 lakhs. Apart from this, we are also issuing PC. We are also issuing PC to equity shareholders 35 lakhs. Next, to the preference shareholders in the form of 15% preference shares for 18,70,000. That's why it is better to go for notes, note number 1. Come down, notes to accounts. Notes to accounts. So here also serial number, particulars, amount rupees. What is the first component? Share capital. Under that, equity shares. Under that, equity share capital. So now the existing equity share capital was 50 lakhs. First you can start with existing equity share capital. How much, guys? 50 lakhs. Plus now we are issuing as PC. Issuing as PC how many shares? 3,50,000 equity shares at the rate of 10 rupees each. That is 3,50,000 equity shares at the rate of 10 rupees each means 35 lakhs. So the total equity share capital was 85 lakhs after issue. In the same way, that how much percentage preference shares? 14%. or preference share capital. Simply you can write preference share capital. Existing 14% preference share capital. Existing was 14% preference share capital. How much? 22 lakhs. Now in the form of PC, you are issuing 15% preference share capital. That is for 18,70,000. 15% preference share capital, simply 18,70,000. May I know the total? 22 lakhs plus 18,70,000. Total 40,70,000. Guys, sir, if journal entries in the books of purchasing company will be there, then only I can able to provide the balance sheet. If you are thinking like that, then you are unable to resolve the problem. Even though journal entries in the books of purchasing company, they are not asking, you are in a position to resolve the problem. Do you understand? Now, may I know the total amount of the capital we need to put under the balance sheet? Here, all of you, 85 plus 40.7, which is 125,70,000. Am I right, guys? So go up 125,70,000. Is it my computation is correct, guys? All of you with me? Is it my computation is correct? If there is a profit, what will be the entry? Which profit, ma? You are asking about this. If PC is less than share capital of the selling company, if profit is there, that such profit should be transferred to capital reserve, ma. Already told you, na. Yes, fine. Let me continue. Share capital is over. After that, coming to reserves and surplus. Be reserves and surplus. Don't worry, guys. Only these two components only computation is required. Remaining all are simple line by line addition. Okay. Come to reserves and surplus here. Number 2, reserves and surplus. Now, line by line addition, because the reserves and surplus of the selling company would become the reserves and surplus of purchasing company. The first, general reserve. Start with general reserve, guys. General reserve. So general reserve, line by line addition, we already done. Actually, general reserve balance is how much? Here we already done. That is, you can take it as working note number 2 as well, not an issue. General reserve we already done. We need to represent 80,000 of the general reserve in the balance sheet. That's why you can directly take it as 80,000. I don't want to show one more time. Why 80,000? Simply I took it as 80,000. If you have any doubt, you can check working note number 2. Why we took 80,000? First, we added 5 lakhs plus 2 lakh 50, which is 7 lakh 50,000. And the last we are set off with 6 lakh 70,000, and the balancing figure will be 80,000 to be shown under balance sheet. Next, after that, export to profit reserve, 3 lakhs plus 2 lakhs, 5 lakhs. Yes, this is in the nature of merger. Each and every reserve we should need to consider. Export profit reserve. How much? 5 lakhs. Sir, can I provide any amalgamation adjustment account here, sir? No, we are in the nature of merger. That's why all the reserves and surplus of selling company would become the reserves and surplus of purchasing company. That's why no need to think about merge, amalgamation adjustment account. Next, investment allowance reserve, 1 lakh. Investment allowance reserve, 1 lakh. After that, P&L balance. How much? 12 lakh 50,000. One more thing, you should need to check any securities premium is available. How I know? If any shares in the form of PC, if I issued at more than the face value, then securities premium is possible. Here issued at 10 rupees. Here also issued at 100 rupees. That means issued at face value only. There is no chance of occurring securities premium. I think so. This is the end for reserves and surplus. Then can you please make it the total of reserves and surplus, guys? Which is 19 lakh 30,000. Am I right? Let me cross check with my notes as well. Just a second. Yeah, we got 19 lakh 30,000. In my notes also, it is clearly there at 19 lakh 30,000. Not an issue. Just I'm cross checking. Okay, nothing else. Please check here, guys. In my notes also, it is clearly available at 19 lakh 30. This is 125.70. Sir, what about the remaining all, sir? I don't want to tell each and everything separately. Simple line by line addition. Simple line by line addition means what I should need to do. Add line by line. Add line by line. Problem is over. Sir, that means here, one second. Yeah. So that means here, just for the remaining all, just I am putting sundry liabilities. Don't put in the examination like that. To save my time, just I am putting it as sundry liabilities. May I know the remaining total liabilities component here? 5 lakhs plus 3 lakh 50, 8 lakh 50,000, 450 plus 350, 8 lakhs, 2 plus 1.5, 3 lakh 50,000. So the remaining liabilities value was, I got 20 lakhs. Just I am putting here 20 lakhs. This is about total of liabilities. What about total of assets, sir? Total of assets were 99 lakhs plus 66 lakhs. How much? 165 lakhs. Is it tallied? Can you please check? Is it tallied, guys? Please check, all of you. To make it simple, just I put the totals, but in the examination, you need to represent under each and every individual assets and liabilities in the specific order of schedule 3. Just I made it sundry liabilities, line by line addition, sundry assets, total, just I made. But in the examination, you need to represent individual asset and liability. That is the reason why I told you, if the problem is asked in amalgamation in the nature of merger, the problem is pretty much easy. What will be there? Line by line addition. There are no other adjustment need to check here. Sir, which assets taken over, which liabilities taken over, no need to think. At which value they are considered, no need to think. Whether goodwill was erased or not, no need to think. Do you understand? All such issues are pretty much easy in case of amalgamation in the nature of merger. Do we agree, guys? All of you? Someone asked, sir, why we take general reserve instead of capital reserve? Hiral, that's actually a good question. What his question is, sir, while comparing the share capital of selling company with the PC, just a second, where it is there? Here. While comparing the PC with share capital of the selling company, if profit situation comes, you are transferring to capital reserve. But if loss situation comes, you are knocking off with the reserves and surplus. What is the reason, sir? Again, I can tell you, the reason is the concept of conservatism. Nowhere in AS 14 also, the specific reason was not mentioned why we are doing. But I can tell you, according to the accounting treatment, I can tell you the reason is the conservatism concept. For example, if the profit I can able to transfer to P&L account, then what I will do, the P&L balance is useful for the purpose of distribution of dividend. The P&L account balance is useful for distribution of dividend. But is it correct to distribute the profit arised on acquisition of business for the purpose of distribution of dividend? Do you think that will be the right? Sir, which profits we need to utilize for distribution of either P&L account or general reserve? Whatever the case may be, both are same in my point of view. In the P&L or general reserve will be useful for distribution of dividend. If I would transfer the profit on acquisition to P&L or general reserve, I may utilize such profit for distribution of dividend. Do you think that such concept is correct? No, never. Always distribution of dividend means the profits which are achieved through conducting of the business activities, conducting of the business operations is correct to distribute as a dividend. So that is the reason why if the profit comes, they are transferred to the capital profits as a capital reserve, which should not be available for distribution of dividend. But if it is a loss situation, which is the concept of conservatism, That's why you can utilize the free reserves. Because for loss situation only, I am using the free reserves. But for the profit situation, I am not using the free reserves. I am using the capital reserve only. That is the concept of conservatism again. Okay. Aditi Tiwari is telling some answer. General reserve is revenue reserve and also free reserve. Well, capital reserve is part of capital. That's why we don't use. Yes, the same thing I explained in different manner. Capital reserve is not capital. Capital reserve is a restricted reserve. Not like that. Capital reserve is a restricted reserve. Restricted reserve means there are two types of reserves only possible here. One is free reserves. Another one is restricted reserve. What is the meaning of free reserves? Those reserves and surplus which are freely available for distribution of dividend without having any further restriction. If you can able to use such reserve is a free reserve. No. Certain restrictions are there as per the Companies Act or as per any other specific act or as per any accounting standard or whatever the case may be. Then such a reserve is a restricted reserve. That's it, guys. Hope you understand that point as well. Is it okay, guys? Sir, you can do amalgamation in the nature of purchase from your side. Can you please tell me, all of you, will you try as a homework for amalgamation in the nature of purchase? Nobody is telling, yeah, amalgamation in the nature of purchase. Just now I done with amalgamation in the nature of merger, na? Amalgamation in the nature of purchase, you know, na, all of you. But I will tell you the crux of the amalgamation in the nature of purchase. Then you can resolve the problem on your own at your home. What are the crux, you know? Whenever the amalgamation is said to be amalgamation in the nature of purchase, we need to compare PC with NAV, not with PC with share capital of the selling company. There is no change in PC. PC is here also same 53,70,000. The PC will be 53,70,000. But the NAV will be how much, you know? The NAV is nothing but total of the assets minus total of the outside liabilities. That means NAV is nothing but this total will be the NAV. This total will be the NAV. Or you can make it total of the assets minus total of the liabilities. That means in this case, NAV of the Y Limited is how much, sir? 30 plus 17, 47. 47 plus 2.5 plus 2 plus 1. 4.5 plus 1. 5.5 plus 5. 10.5 plus 10.5. 57.5 lakhs will be the NAV. 57,50,000 will be the NAV. Because here NAV means assets minus outside liabilities, not the share capital of the selling company. That is the first and foremost important aspect you need to remember. And the case is PC greater than NAV. So the situation will leads to goodwill. PC less than NAV or PC greater than NAV? Sorry. PC less than NAV. So the situation will leads to capital reserve. Am I right? So how much will be the difference? The difference is 3,80,000. Okay, it should need to be considered a reserves and surplus. That is the first and foremost implication. And what will be the second implication, you know? In case of amalgamation in the nature of purchase, the reserves, the statutory reserves, I mean, not only statutory reserve, no reserve of the selling company is taken over by the purchasing company. But still, as per the problem, statutory reserves we need to maintain for 2 more years. That's why in the books of purchasing company, we need to pass one entry, which is amalgamation adjustment account debtor to statutory reserves account. One is export profit reserve and another one is investment allowance reserve to investment allowance reserve. Only to that extent of statutory reserves exist in selling company. Export profit reserve in selling company is 3 lakhs. Investment allowance reserve in selling company nil yaar. No need. Oh, sorry. I'm seeing the purchasing company information. Very much sorry, guys. Selling company. Export profit reserve is for 2 lakhs. And investment allowance reserve is for 1 lakhs. That's great. So the total I need to represent the amalgamation adjustment account for 3 lakhs and export profit reserve 2 lakhs and investment allowance reserve for 1 lakh. While drafting the balance sheet under the reserves and surplus, capital reserve I should need to consider and amalgamation adjustment account I should need to consider as a negative figure and export profit reserve also I should need to consider this 2 lakhs plus the existing export reserve of 3 lakhs in the books of purchasing company. And investment allowance reserve also I should need to consider for 1 lakh. That point you should need to remember. Except this, there is no other deviation. Remaining all are again line by line addition. Can you please tell me, all of you guys, do you try this problem? Do you try this problem, all of you, in the home, at your home? So after completion of this, you can cross check the answer with my notes as well. I clearly established in case of purchase method also what will be the difference. I clearly given, which is also one of the problem given in the study material. You can also cross check the answer with study mat as well. Is it okay, guys? Is it okay? So in study material, illustration number 5, amalgamation in the nature of merger, adjustment, allowance reserve is seen in the balance sheet. Why? I can't understand, ma. Which illustration you are talking? Yeah, fine, guys. Sorry, again asking the same question, sir. Why we are not transferring loss to the goodwill? Hiral, I already told the reason, na. Sir, if you are transferring the amount to the goodwill, if you are transferring the amount to the goodwill, as per the conservatism concept, again the existing profits are available for distribution of the dividends. Do you understand? So the reason was here, as per the conservatism concept, the revenue reserves profits, the only useful revenue reserves are only available for distribution of dividend as per the provisions of the act. That means if we are not making knockoff with the revenue reserves, then the revenue reserve balance will be much more. Then those are also available for distribution of dividend. That's why I don't want to do that. That's why first of all, I want to cancel with the revenue reserves. Do you understand what my point is? If you understand the base point, as per the conservatism concept, here conservatism concept means not profits and losses, revenue reserves and capital reserves. For losses, you can set off the revenue reserves. For profits, you can transfer to the capital reserves. That is the point he is establishing. Okay, fine. Fine, guys. This is a time for break for you. The time will be 8:15. Please, all of you took break up to 8:25. So many persons are again telling that, sir, the same notes is not appearing. Don't worry, guys. Yesterday I forgot actually. Today I will upload once the class got over. Okay. Uh, we will take two very good problems which they are asked in the previous examination. So little bit technical issues are also there in such problems. So let me take up such two beautiful problems after the break. Okay, guys, please all of you go for the break. Guys, welcome back. As I promised you, now we are doing two examination problems, guys, out of which one is related to January 2021 question paper and another one is related to July 2021 question paper. Okay, please concentrate, all of you. Let us try to resolve these two problems in this the remaining slot. Concentrate, guys, all of you, or you can check from your side also whether you can able to resolve the problem or not. Two companies, Galaxy Limited and Glory Limited, engaged in the business of chemicals. To mitigate the competition, a new company, Glorious Limited, is to be formed, to which the assets and liabilities of the existing companies, with certain exception, are to be transferred. So Glorious Limited is a purchasing company. These two companies are selling companies, which is a pure amalgamation. A new company is incorporated to take over the existing company, which is known as a pure amalgamation. Am I right? And one more thing, is it all the assets and liabilities of the selling company is taken over by the Glorious Limited? No. There is a certain exception. With the certain exception means amalgamation is in the nature of purchase. They are indirectly intimating to you amalgamation is in the nature of purchase. That's why the method of accounting treatment will be purchase method, because certain exceptions are there while taking over assets and liabilities. What are such exceptions? They might given below. The summarized balance sheet of Galaxy and Glory Limited as of 31st March 2020 are as follows. First, directly before reading all such information, let me read the requirement. Then while reading the problem, which information I need to consider, for which information I need to give more weightage, I can easily understand. You are required to compute the number of shares to be issued to the shareholders of Galaxy Limited and Glory Limited, assuming the nominal value of each share in Glorious Limited is 10 rupees. Simply, he is asking PC, not in the terms of amount. He is asking in the terms of number of shares. If you know the amount, if you can divide with 10 rupees, then automatically you will get number of shares issued to Galaxy as well as number of shares issued to Glory. That is point number A related to PC. Point number B, prepare balance sheet of Glorious Limited, that is purchasing company, as on 1st April 2020, and also prepare the notes to the accounts as per Schedule 3 of the Companies Act 2013, which is nothing but balance sheet of purchasing company after takeover. That is another question they are asking. Okay, PC and accounting treatment in the books of purchasing company on that basis balance sheet. That means they are not asking to pass journal entries in the books of purchasing company, but based on that you need to prepare balance sheet. Fine. Now let me read the information given in the problem. Under equity and liabilities, shareholders fund, share capital is given, equity shares, face value 10 rupees each. There is no preference share capital at all. Under reserves and surplus, two components are there. One is general reserve and another one is P&L account. Non-current liabilities, 6% debentures is there. Current liabilities, trade payables exist. Under non-current assets PPE, freehold property at cost. Freehold property means it may be the land. Plant and machinery at costless depreciation was given. Okay. Next, motor vehicles at costless depreciation was given. Total 3 PPEs are there. One is land, another one is PPE, another one is motor vehicles. Plant and machinery and motor vehicles are given after reduction of depreciation. Okay. Current assets, inventories were given, trade receivables and cash at bank. Next, assets and liabilities are to be taken at book value with the following exceptions. If you observe here, he told at the time of takeover of assets and liabilities by the Glorious Limited, certain exceptions are there now. Such exceptions they are revealing now. The debentures of Glory Limited are to be discharged by the issue of 8% debentures of the Glorious Limited at a premium of 10%. What is the meaning of this, sir? We are discharging the debentures of Glory Limited. Now, if you are observing the Glory Limited debentures, secured loan 6% debentures is there now, 3,30,000. For such 3,30,000 are to be discharged by the issue of 8% debentures of the Glorious Limited at a premium of 10%. Please read the sentence, be carefully. Now, the agreed value of the debentures was 3,30,000 only. We are ready to pay 3,30,000 to the existing debentures. But how such 3,30,000 we are going to discharge, by the issue of 8% debentures of purchasing company at a premium of 10%. That means each and every debenture will be 110 rupees. Now for 3,30,000, if it is 110 rupees, total 33,000 debentures we need to issue. Out of this, go to the capital, that is debenture capital, that is 8% debentures, you need to record as 33,000 into 100. How much, ma? Sorry, 3,30,000 divided by 110, not 33,000. How much? 1 second. $3,000. Yes. Now, these 3,000 debentures we need to issue. Out of which capital 3,000 into 100, it will goes to 3 lakhs, and the securities premium will be 30,000. Do you understand what I am telling? So the acquired or the agreed value of the debentures, there is no change, which is 3,30,000 only. But to discharge such 3,30,000, we are issuing 3,000 debentures at the rate of 110 each. So 3,000 debentures into 100 will go to the debentures capital. 3,000 into 10 rupees, 30,000 will go to the securities premium. That point is very much important. Okay. Next, plant and machinery of Galaxy Limited are to be valued at 2,52,000, which is the agreed value of plant and machinery. So that is the reason why I clearly told you at the inception of the problem itself, the method of amalgamation is purchase method. The method of amalgamation is amalgamation in the nature of purchase. That's the method of accounting treatment is purchase method. Goodwill is to be valued at Galaxy Limited 4,48,000, Glory Limited 1,68,000. Sir, if the information is given like that, means these assets are also acquired by whom? Purchasing company. Maybe this goodwill was not exist in the books of selling company, but it was clearly given, means such type of assets are also acquired by purchasing company. Like that, you should need to think. Next, liquidator of Glory Limited. Who is liquidator of Glory Limited? One of the selling company. Glory Limited is one of the selling company. So liquidator of Glory Limited is appointed for collection from trade debtors and payment to trade creditors. Okay. Anyway, in the books of the selling company, liquidator will be appointed, and the liquidator, he is collecting amount from the debtors as well as making payment to trade creditors. He retained the cash balance. In the Glory Limited, cash balance is how much? 1,04,000. In Glory Limited, cash balance is how much? 1,04,000. He retained such 1,04,000. Okay, 1 second. He retained such 1,04,000 cash balance on his hand and collected 1,10,000 from debtors. Okay, once collected, the cash balance will be increased and paid 1,80,000 to trade creditors. While paying, the cash balance is going to decrease. Liquidator is entitled to receive 5% commission for collection and 2.5% for payments. Whenever we are paying the liquidator commission, again the existing cash balance got decreased. 5% commission on collection, that is 1,10,000 into 5%. How much? 1,10,000 into 5%, which is 5,500, minus another commission also he is getting 2.5% on payment. Payment is 1,80,000. 1,80,000 into 2.5%, which is 4,500. Now, can you please tell me, guys, all of you, after retaining the existing cash balance, after getting collection from debtors, after making payment to creditors, and after reduction of his commission, may I know how much cash balance is available on liquidator hand? All of you. 1,04,000 plus 1,10,000 minus 1,80,000 minus 10,000. 5,500 plus 4,500 means 10,000. 24,000. Am I right? This 24,000 cash balance is available with the liquidator. Now, the balance cash will be taken over by the new company. The balance cash means this 24,000 cash is ultimately taken over by the new company. Now, all of you please observe. All the assets and liabilities are taken over by the purchasing company, except these issues. Plant and machinery is taken over at agreed value. Apart from the assets and liabilities given in the balance sheet, goodwill is also taken over by the purchasing company. And next, for Glory Limited, debtors and creditors is not taken over by the purchasing company. How you know, sir? Debtors and creditors realized by whom? Liquidator. That means debtors and creditors of Glory Limited not taken over by Glorious Limited. And the direct cash balance is also not taken over by the Glorious Limited. The 24,000 cash balance is only taken over by the Glorious Limited. Such points you need to visualize before doing the problem itself. Are you with me, guys, all of you? Sir, technical issues means certain new points they might be inserted while drafting the problem to test the student knowledge. Because our CA examinations are how it will be in generally. If the student is having good analytical mindset, if he is having good thinking abilities, he can resolve any problem, guys. But certain students, they are following the rigid principles. Their mindset unable to change. Sir, if the problem will comes in, if the problem will comes in that model, they can able to provide the answers. That mindset not at all suitable for our examinations. Then such students may feel lot of discomfort while resolving the answers in the exams as well. So please, all of you habituate to put your mind in the dynamic mode. I mean, whatever the question is, according to the information provided in the problem, we can able to understand, we can react accordingly. If that is your mindset, no doubt about it, guys. Getting or passing the examination, getting good score in the examination is not a big deal for you. Okay. And that mindset is required after getting the qualification as well. That is the reason why they are testing like that. Because whether you are into the practice or whether you are go to the corporate, that is different case maybe. But always there are so much of challenging tasks will appearing to you always. So you should have that ability to crack such issues. That is the reason why they are drafting the questions and setting the question paper in that mode. Okay. Okay, just leave it. What they further need? Compute the number of shares, that is PC. Okay, fine, guys. After checking the information given in the problem, can you please tell me anyone which method of PC I need to adopt? Which method of PC? This is the testing time, guys. Which method of PC? Please, all of you provide your answers quickly. Method of PC. Method of PC. Nobody is telling you method of PC. Is it lump sum? Is it net payments? Is it NAV? Is it intrinsic value? Testing time, guys. Please, all of you sending your arrows quickly. I know there is a delay while seeing the answers, but nothing is coming now. No, till now, even I received a single answer, guys. Till now, I didn't receive any single answer. Yeah, now I got it. Fine. Net asset value method, NAV method, NAV method, NAV method, NAV method. Beautiful, guys. Yeah, that is the level of confidence you should need to require. I clearly told you, after reading the information given in the problem, if you are able to ascertain amount payable to equity shareholders as well as preference shareholders, then method of PC is net payments. But such information is missing. There is a lag. There is a gap. So that's why net payments method are unable to apply. That's why definitely method of PC will be NAV method. So then can you please tell me, all of you, in case of NAV method, how to calculate PC? Assets taken over at the rate of agreed value, less liabilities taken over at the rate of agreed value. Just a moment. The question is January 2022, right? January 2021. January 2021. Question paper question. Okay, the problem is also problem number 11 from my material. So first we are calculating PC. We are calculating the first question as PC. or in bracket, you can clearly tell number of shares issued as PC. Number of shares issued as PC. That is the question indirectly they are asking. Now, particulars, total 2 companies are there. One company is Galaxy. Another one is Glory. Fine. So the method of PC is net asset value method, right? Which is NAV method. In case of NAV method, assets taken over at the rate of agreed values. Come to assets, guys, one by one. Freehold property. Is there any agreed value was given? Below, please check it. Only agreed value is there for plant and machinery. Remaining all are book values only. If nothing was mentioned, book values only. That is 5,88,000 here. Glory, 3,36,000. Fine. Next, plant and machinery. Agreed value is there, guys. Come down. Agreed value is there. Just a second. Yeah. Agreed value for plant and machinery. Galaxy to be valued at 2,52,000. Galaxy 2,52,000. Sir, for Glory, nothing was mentioned means book value only we should need to consider. That is 84,000. After plant and machinery, what will be the next one? Motor vehicles. Motor vehicles, same, that is 56,000. Here nil only. Next, guys, one more thing. You may forgot it. Goodwill is there. In addition to tangible assets, intangible asset, goodwill is there. Please consider the goodwill action also. Always, it is better to start with goodwill. So many students may ignore the goodwill in calculation of NAV because goodwill is also taken over by whom? Purchasing company. That's why Galaxy 4,48,000. Glory 1,68,000. Am I right? Next, fine, guys. Tangible and intangible both are over. Coming to current assets, inventories. Inventories. So inventory, nothing was mentioned means taken over at book value only. 3,36,000, 4,38,000. Yes. Next, trade receivables. For Galaxy, how much? 4,62,000. Nothing was mentioned means at book value only. Don't take the trade receivables of Glory. What is the reason, sir? The trade receivables of the Glory Limited are ultimately realized by whom? Liquidator. That means such trade receivables and trade payables not at all taken over by Glorious Limited. That is purchasing company. That's why put it nil. Then after trade receivables, cash at bank. Cash at bank. For Galaxy, the total cash, nothing was mentioned means total cash is taken over by whom? Purchasing company. What about Glory, sir? Just now we decided Glorious Limited, that is purchasing company taken over, only 24,000 worth of cash only. It doesn't take over that 1,04,000 cash. The reason is liquidator made certain adjustment to the existing cash balance. He collected certain amount from the debtors. He paid certain amount to the trade creditors. He also reduced his commission. After the 24,000 cash balance is there, the balance of cash will only be taken over by the new company. So that's why 24,000 only you can put here. If you want, you can put the working note as well. Clearly, you can provide under the working note. Okay, these all are different assets taken over. Coming to liabilities, guys. Out of the liabilities, 6% debentures is there. Less liabilities. One is 6% debentures. For Galaxy, nothing will be there. For Glory, which will be 3,30,000. Taken over value also at 3,30,000. But we are discharging at the rate of 110 rupees per share. The taken over is at 3,30,000 only. Next, coming to current liabilities, which is trade payables. We can only consider for Galaxy Limited. Again, for Glory Limited, don't consider. Why? This amount of trade payables is ultimately payable by whom? Paid by whom? Liquidator. So just ignore. I think so. I considered everything, guys. Can you please tell me, all of you, NAV individually? NAV of Galaxy, how much? Quickly. Quickly, guys. Guys, someone is asking, sir, can you please clear the amalgamation adjustment reserve? Okay, just give some time. At the end of the session, I will give one more time the clear-cut picture of amalgamation adjustment reserve and all other stuff. Please concentrate on the problem here. Can you please tell me, guys, all of your NAV is how much here? Quickly. Let me calculate along with me. 5,88,000 plus 2,52,000 plus 56,000 plus 4,48,000. 1 second. 4,48,000 plus 3,36,000 plus 4,62,000 plus 2,38,000 minus 4,20,000. I got 19,60,000. Is it correct, guys? 19,60,000 is the NAV of Galaxy Limited. What about Glory Limited? 336 plus 84 plus 1,68,000 plus 4,38,000 plus 24,000 minus 3,30,000, which will be 7,20,000. So the NAV, and which is also equal to the PC. Now in the question, what they asked, they not asked directly the PC. They asked that compute the number of shares to be issued to the shareholders of Galaxy Limited and Glory Limited, assuming the face value of each share in the purchasing company is 10 rupees. Therefore, number of shares issued as PC. Therefore, number of shares issued as PC divided with 10, guys. Here divided with 10 means 1,96,000 shares. Here divided with 10 means 72,000 shares. That is the question actually they asked. Am I right, guys? Are you with me, all of you? Sir, is this figures correct, guys? Is these figures are correct? 1960 and 7,20,000, that is 1,96,000 and 72,000 shares. Almost the first question is over. Out of this sub question number 2, prepare balance sheet of Glorious Limited as on 1st April 2020 and also prepare the notes to the accounts. Sir, before preparation of balance sheet, please all of you observe here. Sir, if the PC is under NAV method, there is no chance of occurring goodwill or capital reserve. Because while comparing PC with NAV in the second entry, if PC is equal to NAV, there is no chance of occurring goodwill or capital reserve. Am I right? That's why don't think about any capital reserve or goodwill will be erased. Next, second issue. Sir, any securities premium will be going to occur, sir, here. Sir, the PC we are issuing at the rate of 10 rupees each only. It was clearly given in the problem. Each and every share we are issuing at the rate of 10 rupees. That's why through issue of PC, there is no chance of occurring securities premium. But through settlement of debentures, there may be a chance of occurring securities premium of 30,000. That point we should need to remember. Do we agree, guys, all of you? So now this is the time for balance sheet. Please all of you concentrate how we should need to think while drafting the balance sheet. I'll explain through this problem. Balance sheet of Glorious Limited as on, may I know the date? 1st April 2020. 1st April 2020. In bracket after takeover. Fine, start with serial number, particulars, note number, amount rupees. So first, equity and liabilities, where shareholders fund, under which A, share capital. Go to note number 1. Come down, guys, all of you. Sir, Glorious Limited is altogether a new company. Now we are issuing in the form of PC. How much, guys? In the form of PC, 19,60,000 plus 7,20,000. Total how much? 19,60,000 plus 7,20,000, which is 26,80,000. So out of the share capital, such amount will be there. I'm not providing any note number. So if you want, you can provide like this. What is that? 1,96,000 plus 72,000. Total number of shares how much? But in the examination, you need to provide clear-cut Notes to accounts. Total 2,68,000 shares are there. 2,68,000 shares at the rate of 10 rupees each issued as PC. Such share capital only be there, which is 26,80,000. B, coming to reserves and surplus, which is amalgamation in the nature of purchase. That's where reserves and surplus of the selling company will not become the reserves and surplus of the purchasing company. But the securities premium, which was arised through discharge of debentures, coming into the picture, which is 30,000. Just in bracket, I am mentioning which is securities premium, 30,000. Sir, someone is asked that, sir, how the flexible mindset will come, sir? How the flexible mindset will come, na? While seeing the problem, each and every information you should need to identify, not remember. You should need to identify. Yes, debentures are there. At the time of making settlement to debentures, securities premium will be there. You should need to identify. Present it clearly. Some students, what they will do, everything they will be remember. That is also not correct process. How much you can remember? You can tell me, guys. No. You should have good identifiable mindset. Identifiable mindset means at the correct time, you should need to identify. At the correct time, you should need to make it present. That's it. Everywhere will be there. Answers are there in the problem itself. What we should need to do, pick up and put it in the right place. That's it, right? Fine. Next, sir, after securities premium, that is under reserves and surplus, the next issue is non-current liabilities, right? Under non-current liabilities, A, long-term borrowings. Now from here, line by line addition, please all of you concentrate. Under the non-current liabilities, long-term borrowings, for this 6% debentures only, we are issuing our own company debentures. So which are 8% debentures. So 8% debentures in bracket, just you can mention. Now we are issuing, the face value was 3 lakhs, securities premium already recorded. That's why you can only present 3 lakhs, not at 3,30,000. Next, after long-term borrowings in non-current liabilities, any other item exist? Nothing is there. You can go to the current liabilities. Under current liabilities, trade payables only will be there. Number 3, current liabilities. Under that, A, trade payable. Line by line addition. But while adding the line by line addition, you can check that under NAV clearly, trade payable for Galaxy 4,20,000, for Glory nothing. So that's why you can only present 4,20,000 only, because the entire trade payable of Glory Limited were discharged by whom? Liquidator, 4,20,000. From here onwards, you can check the NAV directly. Now this is the total of balance sheet. Sorry, total of liabilities side. Then you can start assets. Under assets, non-current assets. Under non-current assets, PPE. So again, you can cross-check the PPE under NAV. So total PPE, these 3. Make it total, guys. This 3 and this 2. Total how much? 5,88,000 plus, 2,52,000 plus, 56,000 plus, 3,36,000 plus, 84,000. So total 13,16,000. Am I right? So total I got 13,16,000. No need to think about depreciation and all such issues, because the provided figures were after providing depreciation only. Intangible assets. Goodwill is there, guys. Under intangible assets, we consider the goodwill under NAV itself. So 448 plus 168. Which is 6,16,000. 6,16,000. So next, if you check the NAV again, inventory, trade receivables, cash at bank are there. Those are current assets. So that's why you can go with current assets directly. A, inventory. So just make it total line by line. 3,36,000 plus 4,38,000. 7,74,000. Which is 4,62,000 for trade receivable. Only for Galaxy. For Glory, nothing, guys. Because the trade receivables of Glory Limited were ultimately realized by liquidator. C, cash and cash equivalents. So cash and cash equivalents, 2,38,000 plus 24. Which is 2,62,000. Is it check it, guys? Balance sheet got tallied. Tallied or not tallied, yeah? So this side 30 lakh 10,000 I got. Sorry, not 30 lakh 10,000, 34 lakh 30,000. Sorry, 34 lakh 30,000 I got. This side also you can make it total 13 lakh 16,000 plus 6 lakh 16,000 plus 7 lakh 74,000 plus 4 lakh 62,000 plus 2 lakh 62,000, 34 lakh 30,000. That's it, guys. Anything is great here? Yes, only one point is great here. What is that? You know, point number 4. That point is great here. So once you should able to appreciate point number 4, everything is over. That is, liquidator is appointed. He collected debtors. He also paid discharging the trade creditors. He also reduced his commission. The remaining cash balance is only taken over. Under NAV computation also, the trade receivables and trade payables of Glory Limited, we should not be taken into consideration, except that there is no special point here. Is it okay to all of you? Yeah, someone is asking, sir, can you please explain the debentures point? Please, all of you concentrate. My debentures, nothing will be there. The debentures of Glory Limited are to be discharged. So the debentures of Glory Limited means, here the debentures of Glory Limited were 3,30,000. Discharged by whom? Discharged, comma is there. Don't mind, comma is there. By the issue of 8% debentures of Glorious Limited at a premium of 10%. Just we are discharging the debentures of Glory Limited. We need to pay 3,30,000 to them. Nothing was mentioned means we need to pay the face value. But how we are discharging? We are issuing our own company debentures, which is 8%. We are issuing each and every debenture at a premium of 10%. If the face value of the debenture is 100, then the premium is 10. You may ask one question here. Sir, nowhere mentioned the face value is 100 now. Take an assumption. Face value will be 100. Here also they not mentioned. Here also they not mentioned face value is how much. That's why we can consider the face value will be the 100 rupees. Yes, you can put under the assumption. Sir, the face value of the debentures will be 100 rupees. Just we can assume. Alternative assumption is also possible if you take. Okay. Now this 3,30,000 to discharge the 3,30,000, how many number of debentures we need to issue? So each and every debenture issued at 110 rupees, right? So divided by 110. So the number of debentures required were 3,000. Am I right? Now the actual entry was 6% debentures account, 6% debentures in Glory Limited account debtor, which is 3,30,000. To now we are issuing 8% debentures. To 8% debentures, 3 lakhs, to securities premium 30,000. This is the entry actually. Now 8% debentures we should need to represent under long-term borrowings. Securities premium we should need to represent under reserves and surplus. That's it, guys. Any other doubt apart from this? Nothing. Fine. Fine, guys. Hope you understand. Problem number 11. So we are having very less time. I know 30 minutes time to explain the problem number 12. Please, all of you take a small breath. Within that breath, I do this. Is it okay, guys? Can I proceed? Hope you are enjoying problem number 11. Sir, someone is told, Thakur asked a question. Sir, if goodwill was not given in the balance sheet, why we are considered? You need to understand one thing here. Who told actually the figures which were given in the balance sheet was only taken over by the purchasing company. Maybe some of the assets, for example, if selling company made a mistake that they are not recorded a specific asset, which is an unrecorded asset, then is it purchasing company is not eligible to take over that unrecorded asset? No. Who told? Sir, whether it is given in balance sheet asset, that asset is only taken over by the purchasing company? No. Like that, the goodwills are internally generated goodwills actually. For Galaxy and Glory Limited, the goodwills are internally generated goodwill. As per accounting standard 26, internally generated goodwill should not be recorded into books of accounts. Such goodwill are also assets. Those were also taken over by whom? Purchasing company. Whenever you are acquiring any specific asset, then purchasing company should need to assign a specific value. That's why those are also assets taken over by the purchasing company. That's why such assets are also taken into consideration in calculation of NAV. At the time of incorporation of assets and liabilities in the books of the purchasing company, such assets are also need to be incorporated. Do you understand, my dear? So that is the reason why we are considering goodwill also under the calculation of NAV. This is the universal principle, guys, not only in this problem. Whenever it was recorded asset or unrecorded asset in the balance sheet, if it is clearly given that purchasing company is ready to take over, or this is valued at so and so, then you should need to consider in the books of purchasing company. Fine. Actually, Bindu Lakshmi one question asked, sir, how we can think about debentures point, sir? Most of the times in exams, what we'll do, we are discharging a premium with 10%. We are discharging. That means what her point is, on 3,30,000, we are applying the 10% premium. That is depending upon your English reading ability, ma. That is English sentence reading ability. In fact, frankly speaking, I am also not teaching the entire classes in English fluently, because we are not the UK guys, right? We are not the foreign country guys. That is not our mother tongue. But still, what I am telling here, you should need to split the sentence clearly. The debentures of Glory Limited are to be discharged. Comma is there. You should need to stop up to that one sentence. Up to that only one sentence. And the remaining sentence, by the issue of 8% debentures of Glorious Limited at a premium of 10%. In that point, two sentences are there. Oh, we need to debentures of Glory Limited, but how we need to discharge? Nothing was mentioned. If nothing was mentioned, means discharged at face value. Now, to discharge that, how we need to issue? At premium. Like that, you need to think, ma. Okay. Fine. Yeah, Pandya Gayatri, the same doubt. I hope I resolved. Okay. Fine, guys. This is the time for the next problem. Hope I resolved all your doubts as well. Please come to problem number 12, which problem was also asked in one of the recent examination, which was occurred in July 2021. July 2021 means that is one attempt before the last attempt. One attempt before the last attempt examination. Come here. The summarized balance sheet of Black Limited and White Limited as on 31st March 2020 is as follows. Two companies are there. One is Black Limited, another one is White Limited. Next. So two balance sheet information is given. Black Limited here, White Limited here. Under equity and liabilities, share capital is there. Under share capital, only equity shares are there. The face value was 100 rupees each. Next. Under reserves and surplus, if you observe, note number 2, general reserve is there, profit and loss account is there. Both are free reserves. Next. Current liabilities, trade payables were given. Under assets, non-current assets, PPE is there. Under current assets, inventory, trade receivable, cash and cash equivalents. This is a small balance sheet given. What is the further information? Black Limited takes over White Limited on 1st July 2020. Black Limited takes over means Black Limited is a purchasing company. White Limited is a selling company. First, you need to identify that. And one more important point here, takes over White Limited on 1st July 2020. but the balance sheet information was given as on 31st March 2020. This is where problem is arised. The problem information is there as on 31st March 2020, but the acquisition was happened after 3 months. That is as on 1st July 2020. What happened from 1st April 2020? What happens from 1st April 2020 to 1st July 2020? 3 months. There may be chance of occurring so many transactions, but we don't know the balance sheet status as on 1st July 2020, because till now, what are all the different problems we done? The date of amalgamation and the date of balance sheet both are same. But here, the problem information, the information given in the problem was as on 31st March 2020, but the date of amalgamation was happened as on 1st July 2020. That is the only one peculiar or the special item we need to discuss in this question. And one more thing I am telling you, this is not a new point, come across it to you guys. And most of the times, you may already come across the chapter partnership accounts. In case of partnership accounts also, what he will do, you know. For example, 1st April 2020 is the starting point. 1st April 2020 is the starting point. After that, the business will be continued for 6 months. After such 6 months, one partner will be died. Then for the remaining 6 months, the remaining partner will be continued to do the such partnership firm, to continue that business. And at the end of the year, that partnership will be ultimately taken over by the company. Is it partnership accounts completed, guys? Where as on 1/1/2020, I'll put here just a second. In one note, I'll put here. You may come across this type of situations that as on 1/1/2020, business started. After 6 months, a partner died or partner admitted. Maybe anything may happen. Then for the remaining 6 months, the business will be continued after the reconstitution of partnership firm. Then here the partnership business will be ultimately taken over by a company. Do you understand? Now what we should need to do? First, the 6 months business continuation accounting treatment we should need to provide. That is profits or losses we should need to distribute among the partners. If any partner is getting the salary, we should need to provide. If any partner's capital, interest on capital, we should need to provide. Interest on drawings, we should need to add it to P&L account and find the profit or loss. Such profit or loss we should need to distribute among the partners by preparing the P&L appropriation. After that, a partner died means reconstitution adjustment we should need to do. Then finally, we should need to prepare the balance sheet of the partnership firm as on the last date. Then based on that balance sheet, we should need to transfer business to the company. Am I right, guys? Do you remember this type of problems in the partnership accounts? The similar type of problem was asked in amalgamation as well. That means, first of all, what I should need to do, I should need to represent the balance sheet information as on 1st July 2020. 1st April 2020 to 1st July 2020, I should need to continue the business. I should need to prepare the financials. Then let me read the further information. And before reading the further information, let me check the questions as well. What the questions is all about. Compute number of shares to be issued by Black Limited to White Limited against the purchase consideration. Again, they are not asking the amount of PC. They are asking the number of shares issued as PC. If you know the amount of PC divided with face issue price, then you will get number of shares issued as PC. Calculate the balance of net current assets of Black Limited and White Limited as on 1st July 2020. This is not the amalgamation question. If you are able to redraft the balance sheet as on 1st July 2020, then you can easily get net current assets of both the companies. Give the balance of profit and loss account of Black Limited as on 1st July 2020. This is also related to the redrafting of balance sheet. Give balance of PPE as on 1st July 2020 after takeover. This is also based on the redrafting of balance sheet. Out of the 4 questions, 3 questions are not related to amalgamation. 3 questions are related to redrafting skills. 1 question only they are testing about the PC. But the question belongs to the amalgamation. Now you can tell me, guys, is it dynamic mode of thinking ability we should require or not? The concept which you learned in the partnership accounts, you should need to apply, which is a universal concept. Sir, one date information is given. You should need to redraft the financials is an universal concept. That is the first and foremost skill you should need to require as a qualified chartered accountant. So that is the reason why they are testing such type of questions. Okay, come up. No balance sheet of White Limited is available as on that date. We know. It is, however, estimated that White Limited earned a profit of 2,40,000 after charging proportionate depreciation at the rate of 10% per annum on PPE during April to June 2020. This profit is after providing depreciation. May I know the proportionate depreciation is how much? May I know the proportionate depreciation on PPE is how much? Property, plant and equipment. 10% per annum. PPE, in which books this is? White Limited, right? White Limited. Coming to White Limited, PPE 2,400. That is simply 24 lakhs. In 24 lakhs, 10% per annum. I required April to June only, multiplied with 3 by 12. May I know all of you depreciation is how much? 24 lakhs into 10% into 3 by 12. 60,000 is the depreciation amount. Okay. We are noting certain information that after charging this depreciation, profit was 2,40,000 in White Limited for the 3 months. In the same way, he is also providing the information for Black Limited. During these 3 months for Black Limited was 4,80,000 after charging proportionate depreciation at the rate of 10% per annum on PPE. Now in Black Limited, PPE is how much? 36 lakhs. Now for 36 lakhs, depreciation is how much? 36 lakhs. Depreciation, 36 lakhs into 10% into 3 by 12. That is 3.6 lakh into 3 by 12 simply. Which is 90,000 is the amount of depreciation. That means after charging this 90,000 depreciation in Black Limited, 3 months profit was 4,80,000. Simply in White Limited, 3 months profit is given. In Black Limited also 3 months profit is given. Both the companies have declared and paid 10% dividend within 3 months period. Both the companies declared and paid the dividend. 10% dividend means here 60 lakhs, here 36 lakhs is the share capital. Here 10% dividend means here 6 lakhs will be the dividend. Here 3.6 lakhs will be the dividend. Am I right, guys? So these are the dividends were given, 6 lakhs and 3.6 lakhs. If you want, you can write here 6 lakhs and 3.6 lakhs are dividends. Next, goodwill of White Limited is valued at 2,40,000 and PPE are valued at 1,20,000 above the depreciated book value as on the date of takeover. This is nothing but agreed value of the plant and equipment. We will check at later point of time. What is the agreed value of the PPE? Purchase consideration is to be satisfied by the Black Limited by issuing shares at par. This is the information given in the problem. Now, can you please tell me, all of you, before resolving the problem, is it PC under which method? PC under which method? Please, all of you provide your answers, guys, quickly. PC under which method? Is it net payments method? Is it net asset value method? Is it lump sum method? Is it intrinsic value method? So nothing is came to me. No answer is coming till now. Quickly. There is delay now. I think so. I am unable to see. Nothing. 1 second. Let me refresh. Just a second, guys. Yeah. Now I got so many answers. NAV method, net payments method, net asset. Only 1% told the net payments, remaining all are told are net asset. That's great. Sir, after reading the information given in the problem, is there anywhere mentioned that the equity shareholders of White Limited getting something? Nothing is there. So that's why if you are unable to know how much amount payable to the shareholders of the selling company, then automatically method of PC will be NAV. That's great. But I don't want to resolve problem number 1 directly, guys. I'll do one thing. First of all, I will do one thing. I will first check with question number 3, because out of the sub question 4 questions, question number 3, they are asking about give balance of profit and loss account of Black Limited as on 1st July 2020. So first, let me start the answer with that question. Please, all of you concentrate. Question is July 2021. July 2021 question paper. And the problem number is 13, right? Problem number is 13. So I'm starting with sub question number 3. What is the sub question number 3? Profit and loss account of Black Limited. P&L balance of Black Limited as on 1st July 2020. Consider it, guys. Sir, P&L balance as on 1st April 2020, how much? 1st April 2020, how much? In Black Limited. All of you, please check the Black Limited. In Black Limited, under the reserves and surplus, P&L balance was 7,20,000. You can consider it as an opening balance. You can consider it as an opening balance, which is 7,20,000. So this is particulars. This is amount rupees. Now, can you please tell me, all of you, as per the information given, that is in point number 3, in Black Limited, after charging 90,000 depreciation, profit for 3 months, how much? 4,80,000. Profit for 3 months. 4,80,000 you can add here. Already depreciation was reduced. No worries. Next, they also distributed the dividend. If you remember, it is clearly given that both the companies have declared and paid 10% as dividend. At the time of distribution of the dividend, what is the journal entry, guys? P&L to dividend payable to bank. Are the free reserves to dividend payable to bank. Let us assume we are using the P&L account balance. Now, dividend in case of Black Limited is how much? 6 lakhs will be the dividend, right? Now you can reduce the dividend of 6 lakhs. So apart from that, is there any other information which will going to impact the P&L account? No, nothing is there. Now P&L balance as on 1st July 2020. How much, guys? 7,20,000 plus 4,80,000 minus 6 lakhs. I'm getting 6 lakhs. Is it correct, guys, all of you? P&L balance. One person asks, sir, can we answer any part of the question before or after? Who will stop you, my dear? That is as per your wish. As per your wish. Because, sir, if someone is connected, first, for example, if question number 2 will come, then question number 1 answer will be much more easier. Then you can start with part number 3, but you need to mention clearly sub question number 3. You can mention clearly. That thing is necessary. Nobody will stop you, guys. And at the time of evaluating the answers as well, they will clearly check which sub question it is all about and that one. But all the sub questions you need to mention at a single place. For example, the problem number 13, sub question number 3, you are mentioning here. Problem number 13, sub question number 1, you are mentioned in another sheet. That's not correct. You should need to mention all sub questions at a single place. Is it okay? Fine. Next. So one sub question was over for me. Next, guys, one more sub question. Let me check. Give the balance of property, plant and equipment as on 1st July 2020 after takeover. Okay, we will see at later point of time. Next, which one? Let me go with the PC. Okay, let me go with the purchase consideration. Directly, I will consider point number 2 itself. That is point number 1, not point number 2, point number 1. So PC, NAV method. All of you, please participate along with me. Particulars. Two companies. What are such two companies? Two companies I need to consider only one company. Selling company only I need to consider. Selling company, is it black or white? White limited. I need to consider only white limited. White limited amount rupees. Okay. Assets taken over at the rate of agreed value. Assets taken over at the rate of agreed values. What are all the different assets, sir? We are taken over from selling company, that is white limited, one by one. PPE, property, plant and equipment. Consider all of you. PPE, property, plant and equipment. Sir, virginal value was 24 lakhs. Am I right? After that, we are providing the depreciation for 3 months. Can you please tell me, for PPE in white limited, depreciation was how much? In white limited, depreciation was 60,000. Am I right, guys? Because this is related to black limited. So 60,000 will be the depreciation for 3 months. Fine. After that, he also provided another information where point number 5, please all of you concentrate. Goodwill of white limited is valued at 2,40,000 and property, plant and equipment are valued at 1,20,000 above the depreciated value on the date of takeover. So above the depreciated value, we are agreeing 1,20,000 in excess. Now this is the agreed value of the PPE. 24 lakhs minus 60,000 plus 1,20,000. How much total? 24 lakh 60,000. Am I right, guys? All of you agreed value of the PPE. Next, you may ignore the goodwill. Please consider the goodwill also clearly given, which was 2,40,000. So tangible, intangible, both were considered. Come up to the balance sheet. After PPE, current assets are there. Inventory, trade receivable, cash and cash equivalents. Next, inventory. Sir, related to inventory, nothing was discussed. Then we can presume that the same level of inventory also they are going to maintain as on 1st July 2020. So the amount was 7,20,000. Am I right? Next, trade receivables. Sir, related to trade receivables also there is no information given. So that's why the same level of trade receivables they are going to maintain. Sir, how you know, sir, such information? Sir, if nothing was there, there is no other choices to calculate such information. Then we can presume that the same information will be there. And they also clearly told that no balance sheet of white limited is available as on that date. It is, however, estimated that there are something given means except these things remaining all are same to same. Okay. So trade receivables 10,80,000, right? 10,80,000. Sir, then what about cash and cash equivalent, sir? Cash. Just I am putting cash. You need to calculate cash and cash equivalents. Please consider it, guys. All of you. Existing how much? 4,20,000, right? Existing 4,20,000. Tell me, guys, all of you. As on 1/4/2020, existing was 4,20,000. Plus, in white limited, profit how much we are getting? White limited. In white limited profit, we are getting 2,40,000. Such 2,40,000 will also be there in the form of cash, na? And depreciation non-cash expense is there. Due to depreciation, there is no cash outlay. Due to such expenditure, there is no cash outlay means to the extent of 60,000 also cash will be there. Minus, it is clearly given that dividend was paid for 3 months. Dividend was paid. Sir, dividend was paid means in white limited dividend was 3.6 lakhs. That's why to the extent of which 3,60,000 dividend outflow will be there. This is the closing cash balance you need to represent. 4,20,000 plus 2,40,000 plus 60,000 minus 3,60,000. Amount will be 3,60,000. This is the important point, guys. These all are the assets. Less liabilities taken over at the rate of agreed values. Can you please tell me, all of you, what are the different liabilities it had? Only one liability, which is trade payables. There is no information specifically given for trade payables. That's why simply we can consider 3,60,000. So trade payables, 3,60,000. Is there any other liability? Is there, guys? Nothing is there, right? Fine. Everything we made it correctly. Then can you please tell me, all of you, NAV is how much? NAV or PC is how much? Which is 45 lakhs. Am I right? The PC is 45 lakhs. But the question they asked that how many number of shares issued as PC? Compute the number of shares issued by Black Limited to White Limited against the purchase consideration. Now in Black Limited, each and every equity share was 100 rupees. Therefore, number of shares issued as PC. Therefore, number of shares issued as PC is equal to 45 lakhs divided by 100. That equal to how much, guys? 45,000 shares. Nothing is great, guys. If you know the drafting of the balance sheet, then everything will be simple. Sir, should we give you a note saying that it is assumed that values are same, sir? Yes, if you want, you can provide, ma. Otherwise, no need to provide also. Both are okay. Why? This is a pre-assumption. There is a difference between assumption and presumption. Presumption means, sir, if nothing was mentioned, everyone will be assumed in the same way. There is no other alternative to assume. Do you understand? No need to provide the assumption as well. Is there any other assumption possible? No, there is no chance. If you want to put certain figure, how much figure you will put there? No, that's why everybody will follow that one only. Do you understand? That's why it is not an assumption. It is a presumption. Okay, fine. Next, guys, that is question number 1 over, question number 3 over. Now come to question number 2. Calculate the balance of net current assets of Black Limited and White Limited as on 1st July 2020. I will provide for Black Limited, guys. From your end, you can provide for, I will provide for White Limited. You can provide for Black Limited. Okay. The reason is White Limited it is already available with me. This is related to White Limited only. Net current assets. Current assets means these three minus current liabilities. Then automatically I will get net current assets. Am I right? So just I'm writing net current assets for White Limited. For White Limited. You can provide for Black Limited, guys, in the same manner. I don't want to provide again. Only for White Limited I am providing. So total of the current assets. This is as on 1/7/2020 they are asking. So current assets total how much? Can you please tell me? 7,20,000 plus 10,80,000 plus 3,60,000 minus current liability 3,60,000, which will be 18 lakhs, guys. So net current, only current assets. Now first I need to calculate. I'm so sorry. 7.2 plus 10.8 plus 3.6, which is 21.6. 21,60,000 is the current assets. If you want, you can give the individually. Less current liabilities. The current liability will be the only trade payables, which is 3,60,000. Therefore, net current assets are 18 lakhs. I only provided for White Limited. You can also provide for the Black Limited in the same manner. Next, give the balance of PPE as on 1st July 2020 after takeover. Please concentrate this one. Coming to the last point. All of you, please concentrate, guide. Last point, which is point number 3. What they're asking, you know, they required PPE balance. PPE after takeover, they want to work out. First, before doing this, PPE in Black Limited, how much? PPE in Black Limited as on 1/4/2020, how much? First, we should need to begin with Black Limited. Out of that, PPE is how much? 36 lakhs. Am I right or wrong, guys? 36 lakhs will be the book value, from which you are providing the depreciation for 3 months. May I know in Black Limited depreciation is how much? In Black Limited, depreciation was 90,000. Now you can reduce the 90,000 depreciation. So 36 lakhs minus 90,000, which will be 35 lakh 10,000. Is there any other information apart from that related to Black Limited PPE? No. Next, add agreed value of White Limited PPE. Agreed value of PPE related to White Limited. It is there. No need to calculate again, all of you. Agreed value of the PPE of White Limited was 24,60,000. Now you can check the total. 35,10,000 plus 24,60,000, which will be 59,70,000. This is the value of the PPE to be shown in the Black Limited financial statements after takeover. Can you please tell me, guys, in any problem where the amalgamation adjustments are there here, only for calculation of PC under NAV method, only we applied the provisions of amalgamation. That is also with respect to computation of PC. And remaining all are only redrafting skills of the balance sheet only. That's it, guys. This is the end of the problem. Sir, this question is a consolidation of what we learned before. Nothing related to amalgamation. Yes, you are absolutely correct, ma. Yeah, sir, finally, I am closing the concept of amalgamation with one point. That is amalgamation adjustment account, because some 2 to 3 persons actually asked previously. I know I am running out of time. Please participate for 2 minutes. Then I'll be closed. Then I'll continue with the next session. What is that? Sir, there are 2 types of amalgamations are possible, right? One is amalgamation in the nature of purchase. Another one is amalgamation in the nature of merger. Now, can you please tell me, all of you, in case of amalgamation in the nature of purchase, is it selling company reserves and surplus taken over by the purchasing company or not? The reserves and surplus of the selling company is not taken over by the purchasing company. But as per the statutory requirement, out of these reserves, if any of the statutory reserve is need to be maintained by the purchasing company after taken over, if that is a condition, then to comply such statute, purchasing company should need to maintain such statutory reserve by passing the entry amalgamation adjustment account at R2 statutory reserve account. This is also temporary maintenance only. For example, it need to maintain 2 more years. Then this entry was passed. Once the 2 years got completed, the entry will be reversed. That is statutory reserve to amalgamation adjustment account. Sir, where amalgamation adjustment account to be shown up to the 2 years period, sir, which is shown under reserves and surplus as a negative figure. Once the 2 years over, anyway, the impact got closed. Next, in case of merger, amalgamation in the nature of merger, the selling company reserves and surplus automatically taken over by the purchasing company, including free reserves and statutory reserves. That's why no need to maintain the amalgamation adjustment account in further. We are already take over the both free reserves as well as statutory reserve. That's why to comply the statute, we already taken over. No need to maintain the amalgamation adjustment account. That point only I explained there. Hope you understand, guys, and enjoyed the entire chapter of amalgamation. Still, I told you I'm running out of the time. You know, in our ICA classes, we are unable to cover each and every problem, but I try to cover each and every corner of the concept, and some of the certain important problem also I covered. So if time permits for you, you can also consider certain problems of the study mat and resolve it. And the previous examination also, if you can take it, or the RTP problems also, you can take it for the practice. Still, if you have any doubt, you can reach out to me. That is not an issue. I'll upload the entire notes once again for the benefit of the larger audience. From the next lecture onwards, I'm going to start with the new topic, which is an internal reconstruction. Until bye. Have a good day, guys.